Well, the May real estate numbers are out, and depending on how you look at them, the numbers might be a little bit deceiving. Sales are up, listings are down, and on paper, it looks like we might be edging towards maybe a bit of a recovery. But that does not necessarily mean that the sellers, are suddenly in the driver's seat. So by the end of this video, you're going to find out which areas of Halton are outperforming the others, where the best opportunities are for buyers, and why the Milton numbers might not kind of really necessarily add up to what the headlines are suggesting. So without further ado, let's get into it. Hey, my name is Andrew. I'm with Roach Family Real Estate Team, and this is your May 2026 Halton Region Market Update. So taking a closer look here at, digging into Milton, Burlington, Oakville, and Halton Hills specifically. So let's start with the big picture. Across Halton Region, we saw the number of sales increase year over year by 6%. So definitely a good thing. All the while, we saw new listings come down 19% across the region as well. Again, a good thing. We want listings to come down so that supply-demand imbalance kind of levels out a little bit. That pushed the sales to new listing ratio up from 32% a year ago up to 42% this May. Once we are kind of technically between that 40 to 60% sales to new listing ratio, is generally considered to be a bit of a balanced market. So we're just edging into potentially that balanced market territory. While months of inventory fell from 4.5% down to 3.7%. Months of inventory is the number of months it would take if no new listings hit the market and the same number of sales that month happened. How long would it take? So we're looking at about almost 4 months of inventory. So yes, in comparison to last spring, the market definitely improved, but that does not mean that we are now all of a sudden in a strong market. We have to remember that. We came down from super high inventory levels from last year, peak inventory levels in the last couple of years that we haven't seen in decades. I'd have to go back and look at the charts, how long it's been, but so we're improving, we're coming down, but that doesn't mean that we're all of a sudden in a super strong market. And we are still seeing new listings hit the market. In May, we saw about 2,000 listings hit the market in Halton Region. Whereas if you compare that to kind of like pre-pandemic levels, a little bit more normal, about a decade ago or so, we're still carrying about 1,000 new listings hitting the market than there was at that time 10 years ago. But active listings is definitely one of the ones that we want to look at the most, because that's how much is actively on the market right now. It's all fine and well to say, hey, a new listing came up and maybe it came off, so popped in, popped out. But the number of listings that are sitting on the market is one of the things that we need to look at. Is how much competition a seller has and how many options a buyer has at any given moment, really. So in Halton Region in May, we had 3,000 active listings, just a little bit under. Whereas 10 years ago, it was only around 1,000. So we've got 3 times as much active inventory on the market today as we did 10 years ago. So what does that mean? It basically means that even though the market is kind of maybe improving from last year, it doesn't exactly mean that buyers are fighting over scraps like they did 5 years ago in the peak of the market. So let's have a look and see which markets in Halton Region maybe performed the best and which ones might have been lagging. And maybe there's just some segments in there that we can kind of like pick out as well. So Burlington was definitely one of the strongest markets in Halton Region this month, or last month in May, where sales were up 10% and new listings were down 14% in Burlington. And that pushed the sales to new listing ratio even higher, up into 46%, which would solidly be into that balanced market territory. Now, Oakville tells a bit of a different story. Sales were basically flat year over year, but prices were noticeably stronger. So the average price went up 8% in Oakville year over year, with the median price going up 10% year over year. So the interesting thing, though, is that the average price actually came down from April about 2.6%. So the strength is there year over year, but it's still trying to find its footing as it kind of, stumbles through, the current supply-demand imbalances. And this is why I said, if you, depending on how you look at the market and how you slice it, just headline reading might be a little bit misleading. Context is always very important. Now, Halton Hills also tightened in supply, where supply demand, strengthened a little bit more. Sales were pretty much flat year over year, but the number of new listings actually dropped about 30%. So less inventory coming on the market from last year definitely means that you're not going to have quite as much active inventory as one might have expected last year. At the same time, we actually saw prices come down on average 10%, and where the median came down 13%. So again, we're starting to see kind of moving in both directions, right? Improving on one front, but maybe not so much on the other front as we're trying to find our footing. And that's a good reminder why we can't rely just on, one statistic or one number, et cetera, to kind of judge overall market conditions, because while one might be improving, the other one might not be. And we really want to be looking at the entire market as a whole. And then there's Milton. So we want to look at Milton, and I found that this one to be one of the most interesting markets in Halton region this month, because the numbers just seem to be kind of like pulling in opposite directions, right? So we had sales up 9% year over year. We had new listings down 28% year over year. The months of inventory actually improved from 4.7 down to 3.4%. So again, moving in the right direction for sure. Now on the surface, that sounds wonderful. Sounds like we are quickly on our way to a recovery, but the prices tell a very different story. So on average, the average sale price in Milton came down 7% year over year, while the median price actually came down 12% year over year. So we are, again, seeing that improvement on the supply side, but not an improvement on the average price side. So which basically means that buyers still have choice. Sellers are saying, yeah, okay, I'll take a little bit less. And we've been seeing that over the years, and we still just aren't at the bottom, right? We still have some room to go until we find that solid footing. So we are, I think, dare I say, I might get myself in trouble here, we are at the beginnings of a recovery. We are not recovering. We haven't recovered, but we are moving in the right direction as far as supply goes. It'll still take some time to chew through. Real estate is a slow-moving ship. It's not the stock market that one stock will recover overnight. This is something that takes time. It's a very slow-moving ship. So these are those little pinpoints that you're going to start to say, hey, what is happening in the market that would eventually lead to that recovery? And so this is where we are. I'm not saying we're at the bottom yet. In fact, I'm telling you we're not at the bottom yet. But I think that these are the things that we want to see. We want to see that supply start to come down. We want to see the buyers start to come back into the market. And once we start to have, more buyers than sellers, et cetera, then that's when we're going to start to really get into that recovery trajectory, right? Now, a really important metric that a lot of people don't talk about, and I'm kind of surprised why I don't hear it more often, is the number of terminations, the number of canceled listings in comparison to sales, rather. Sorry. So while we are seeing sales improve, and that's great, and we are seeing supply come down, that's great, we are still seeing a lot of terminations, a lot of listings canceling rather than stay on the market and wait for a buyer to come along. And to give you just a little bit of a perspective and understanding as to why that's significant, if we look at Milton in May, we had 192 terminations and only 176 sales. So the number of sales was less than the number of houses that came off the market. Now, I will say that that too is improving, because a couple of years ago, it was a 5-to-1. It was 5 terminations for every sale. Last year, it looked like it was about 2 terminations to every sale, and now we're getting down closer to that 1-to-1 roughly. So that's moving in the right direction as well. However, we are still seeing an abnormal number of terminations to sales. And so what does that really mean? So to me, that means that there's still a big gap between what buyers are willing to pay and what some sellers are willing to accept. And I mean, that is just true across the board. I can't tell you the number of offers that we have put in or have received where we are like hundreds of thousands of dollars apart initially. it's common to have offers come in, certainly 100,000, no question. 100,000 under asking is just your initial, but 200,000 or 250,000 under asking, depending on the price point. And so sellers are getting emotionally attached to their list price, and they're saying, I'm not even going to sign back. And then buyers are saying, well, if they're not going to work with me, I'll go and buy something else. So the gap between the buyers and the sellers are just so wide right now. And we're seeing it in the terminations. They're saying, forget about it. I'll just wait until later. And I just don't think that's a really good strategy right now. I think that buyers and sellers should be doing their best to work together and to try to find where that real gap is. I guarantee you it's not a $200,000 spread. Your asking price, your listing price is not your absolute bottom sale price. And your initial offer as a buyer is not the most you're willing to pay. It's somewhere in the middle. Now you have to get rid of all that noise on the outside and find out really how far apart you are. And usually you're only $10,000 or $20,000 apart, maybe a little bit more. And maybe it is an insurmountable amount of value there that you cannot, that gap cannot be bridged. But I would also suggest that probably more times than not, it's not that insignificant, and it is a bridgeable gap if you just work together and put your pride aside and just said, hey, what will you do? Get as close as you can. Put the offer, put the time in. The number of times I hear people say, I don't want to waste my time. Dude, it's 15 minutes. 15 minutes. For a buyer or a seller, it's maybe 2 minutes or 3 minutes, a couple clicks of a button. For the agent, it's 15 minutes to change some values, to do a sign back. Let's put the work in and try to get something done. Man, I can't tell you how frustrating it is in this market right now, working with buyers and sellers that refuse to try to compromise and to find where the common ground is. Okay, so now that I'm done my rant, or what maybe came across as a bit of a lecture, let's look at the overall market here. The market is improving. It's maybe not as strong as maybe some of the headlines will suggest, or maybe some of the agents out there will maybe tote, but it is on the way. There are some strengths, there's some pockets, etc. Not across the board, but there are opportunities. And there's transactions, there's deals, there's opportunities to be had if buyers and sellers will just work together. Just be patient, and you will find your seller, you will find your buyer, etc. Don't forget that there's a lot of people out there that feel that their house was worth X, and so they need to hold on to that number. Yes, you didn't sell in the peak, and you maybe missed that opportunity, but you also didn't buy in the peak either, right? So while you are selling for a little bit less, you will buy for less, and that gap is basically going to be maybe the same. And actually, if you're an upsizer right now, it'll actually be an improvement for you. So if you own a townhouse or a semi and you're looking to get into a bigger detached, this might be actually a really good opportunity for you, where the gap is a lot closer than it was, say, 5 years ago. And with that, I'm Andrew Roach with the Roach Family Real Estate team. Thanks for watching, and I'll see you on the next market update.